Yo, welcome to the 1022 MMXM Masterclass, also known as the market maker buy or sell model. And basically, I'm going to be talking about how MMXMs can be used as a system and essentially a whole framework. So, the way I see it, MMXMs are the framework and the catalyst essentially for whatever liquidity I want to see get ran that day, or PD array, point of interest, whatever you want to call it. So let's jump right into it. And so for the MMXM, this is the buy model specifically, market maker buy model. And you have your original consolidation, equal lows or low resistance lows, either can be used, and that is essentially your original consolidation. I'll show you what it all looks like on a chart later, but focusing on this for now, we want to see bullish price delivery coming after this consolidation. And another thing is with consolidation like that, I like to see it as a trigger, like a gun loading. Just do, and then takes off. You know what I mean? So after our consolidation, we have our first stage of accumulation. Accumulation are higher highs being made in the buy model, and we have our second stage coming right after that is the reaccumulation. So maybe we get a good expansion up, and then we start reaccumulating again. And we have a higher time frame concept back behind this because we are seeking liquidity. That's where the next stage comes in, the manipulation. So maybe we have some equal highs up there, maybe a higher time frame imbalance, a daily or like opening range gap, a weekly gap, a new week opening gap, some sort of higher time frame concept that indicates that we're going to reverse here. So after our higher time frame concept is met, see we have seeking liquidity. That will be our manipulation here. So after that, we will have our low risk shorts, and then we want to see our first leg. So this is from John Fibonacci up here. This exact chart, this exact screen, he made this. I guess he spelled distribution wrong a little bit on both these, but that's all right. So after our manipulation, we would enter our low risk shorts, and where we want to see our first stage of distribution, our first leg, and then our bearish price delivery. So another thing I want to mention is the law of the return. If you guys have seen 48 Laws of Trading, you'll see that one of the laws are the law of return, basically saying what goes up must come down, what goes down must come up. To put it short, long story short. So after our first leg of distribution, we have our second leg run to liquidity. So we have our redistribution. Maybe we get a very large spike, like a falling knife type of thing here, and then we start making those lower lows again. That's our distribution. We're making lower lows consistently. And then targeting could be our consolidation, equal lows, or our low resistance lows. Remember, it can be either of them. I'll show you a few examples in a second. So that's the buy model. Sell model is basically the same thing, but inverse. So we'll keep this quick. We have your consolidation, equal highs or low resistance highs here, and then your distribution. You keep making your lower lows. Your redistribution, basically your bearish price delivery, your sell side. And then another higher time frame concept, maybe we have a high resistance low, a low resistance low, or an imbalance. Same thing I talked about, just inverse. And yeah, we'll have our manipulation after that, indicating our low has been set. And we will start. And I just realized I got it wrong. I was saying sell. That was the sell model before that, or I was saying that was the buy model. What I was just talking about. This is the buy model. Back there was the sell model, because we would be entering shorts, obviously. So After the liquidity has been seeked, we are looking for bullish price delivery, and your low risk buys can come in after the manipulation, or you can wait for a mitigation from the second leg of redistribution to the accumulation. That's where I like to take my entries using this framework. Maybe entering on the reaccumulation as well isn't bad. It's just more ideal to get in a discount versus a premium. So after that, you have your accumulation, you have your expansion, and you start making your higher highs. And then your low risk longs and first leg can go in here, like I was saying. And then expansion, reaccumulation to seek liquidity, which is your original consolidation, your equal highs, or your low resistance highs. So let's take a look at this on the chart. So I will actually pull up a market maker sell model that I took. This was kind of a while ago. This was July 31st of 2025. I'll share some more recent ones, but I like this because I was tweeting during it on my personal account, as you can see, and basically just journaling the trade, like, in a sense. I like to journal this way with tweets because it kind of allows predictive pricing, and yeah. So you had your data lows, so it wasn't original consolidation, but it was data lows and equal lows, as you can see here, and essentially a little bit of consolidation. Now, I marked this up as accumulation. This is more of expansion. This would be kind of more your first stage of accumulation, but in my opinion, I would like to count all of that. So you have your low risk, or you just have your first accumulation, and then second leg of accumulation, and then manipulation. There was an imbalance over here that you can't see, but there was an imbalance over here, I remember, and tapped that and manipulated. And then here I tweeted possible market maker sell model on NQ. If we start distributing 23260 is a good target, which I believe was down here at like a volume imbalance or something. I learned from that and realized that I wanted the lows. So here's a gap as well here, a Sunday gap. So yeah, 6 p.m. gap. So in our first stage of distribution, we see that in this gap here that we respect it and then trade lower. I really like to stack confluences a lot when I am trading. In my system, I really like to have multiple confirmations and confluences before I even enter. So that was a good confluence there. And we get our distribution, we trade lower, we come back into the range a little bit into, I want to say this is around the 50%. If not, it's around there. It's probably still in a premium, but besides the point, I tweeted here, mitigated from that accumulation to distribution and inverted the 6 p.m. gap from yesterday. 23222 is a solid final target, which is down here. You can see 23222. And then, bang, I tweet in here, there's that second leg. Once we get our second leg, that seeks liquidity. And then you can see I had a little typo here, 223. It was 23222, done. So, yeah. There is that, and then I will show you a buy model here. So this actually occurred today. So we will go to YM, 5-minute time frame, and right here you have high resistance highs here that we were looking for. So here we have an imbalance and kind of just an inefficiency in price here. Now, I wouldn't enter just based off that. I wouldn't consider this a buy model just yet. But we scale down a little bit and go to a lower time frame. I'll remove this. You can see that we have our mitigation from the second leg of redistribution. So here's the high resistance highs. We will mark that, make it gray. Here is our first stage of distribution. and then here is our redistribution here. You can see that we keep making lower lows. Well, this is just more of choppiness, but I would still consider that distribution because we are trading lower. And we mitigate into here. We have a nice imbalance right here, actually an inversion imbalance, if you will. That was very nice for entries. And trade higher, we get our official first stage of accumulation. And then we get our second stage of accumulation when we trade higher here, but we don't take the high. We kind of sit in this range a little bit, but we eventually take the high at 12:37 p.m. So that is the buy model on a chart with candlesticks. And then if we take a look at NQ on an hourly time frame, or also the bigger the time frame, the bigger the confirmation is how I like to live by. So if I see a market maker buy or sell model on the 1 hour, 4 hour, or even daily, I am more likely to trust that versus then 15, 30 second, and even minute sometimes. I do love the minute chart. That's where I base a lot of my entries at and a lot of my framework at, but yeah. So you can see here we have our original consolidation on NQ. We have our imbalances here and another imbalance here. We'll mark this whole thing out. So you can see that's our higher time frame concept. We have our distribution here, our first stage, and then we have our second stage here. Keep making these lower lows, and then we have our manipulation. Now this isn't the cleanest because NQ did a lot of choppiness this week, but we can see that that's a clear form of accumulation just because we keep trading higher, and we eventually today got a big expansion up and took the high and finished off the buy model. Now I will show you a current one that I'm looking at right now, and that is the weekly chart on Bitcoin. I really do like this with indices more. That's just what I've back tested the most and seen the most results on. But it can work with any asset. Bitcoin could be one right now. As you can see, we have our original consolidation at the low. We have marked out at 49,000. And remember, this is a weekly chart, so that is very nice. There is no higher time frame concept on the manipulation. We get our bullish price delivery, but there is no higher time frame concept on the manipulation because, well, that's all-time highs. I think our all-time high was, 126, 260, something like that, somewhere around there. But then we get our first stage of distribution, and we actually trade back into a weekly imbalance, fill it perfectly, and keep trading lower. Now we're just kind of waiting to see if we get that second stage of redistribution. In my opinion, on Bitcoin, let's throw up a fib here. So we got the high to the low. Sorry, I'm on a different template. But I do want to see us trade back into the 50% before we go lower. But we may not get that just because if we are going to continue this bearish, I really don't want to see this get filled too much. Maybe like halfway in it to the 50% of that before we trade lower. Or it could fill all the way. But we'll see. We'll just wait on it. And because we are in the premium right now, low risk shorts would have been nice after this to take lower. Well, we'll wait on it and see how it goes. But yeah, that's really all I have for you for the MMXMs. Really utilize your fib tool in this to make sure you're getting discount entries. Now, it's decent to get entries in the second stage of, I'm not saying don't enter on the second stage of distribution or accumulation, but essentially you want to get in a discount. So buy models, you want to get discounts, but remember entering in these are still decent in the 75% and over 50%. It's still decent, like still going your way if the trade decides to play out. And then sell models, same thing, 25% ideal entries, and then I just marked my fibs up from the low to the high of the manipulation and original consolidation equal lows, or high / low resistant lows. So yeah, that's about all I have for you in the MMXM Masterclass. I do say Masterclass, but it is pretty simple. Really utilize this as a framework and not like your whole trading style, you know what I mean? This is all just framework at the end of the day, but I really, really do love to trade these. These are one of my favorite things because you're trading towards liquidity. That's, in my opinion, the best trades. You are trading towards the liquidity. And you stay patient, you stay resilient, and patience pays. So that's all I have for you guys for the MMXM Masterclass. And yeah, I'll see you guys. Bye.